In this AGM, let's take a moment to look back at what we have achieved since the scheme was started. The scheme was established actually in 1982, and since then the scheme has achieved so much. For example, the assets of the scheme have continued to grow and are now valued to the tune of Kenya shillings 8.9 billion. This is the value as at 31st December 2014. The membership currently stands at 1,885. This includes the in-service members and, of course, the pensioners.
The purpose of the pension fund primarily is to provide members with a pension once they retire from the bank. And in the case that the member is not there at the time of retirement, in the case of unfortunate event of death, then the benefits under the scheme are used to provide relief to the member's dependents. And here we are talking about spouses, children, and any other beneficiary. So some background about the scheme. The scheme has already hit 30 years. It was established 1st January 1982. It operates on a defined benefit basis, which means that the benefit that you get from the fund is promised by the sponsor, and it is determined by a formula, which I shall share shortly. The scheme is non-contributory, which means that members do not contribute, but the bank is responsible for meeting the costs of the benefits that are provided. The scheme was closed effective 1st June 2006. It was closed to new members. So any new member from the fund who joined the bank from 1st June 2006 is required to join the DC scheme.
As you have seen from your audited statements, a significant portion of the portfolio is invested in Government of Kenya securities or treasury bonds. This provides, stable income through time, which goes to support the need to provide for the monthly pension payroll. Interest rates moved lower throughout 2014. This actually gives an increase in what we call the fair value of bonds, which appreciates the assets within that part of the portfolio. Interest rates are relatively high right now, which also gives us advantage, to invest in bonds at decent returns for the future years, as well as also into fixed deposits and the like.
The pension, although it's 2%, it's going to be based on your final salary. So it's not your salary from 30 years ago. And your final salary at the time you retire should theoretically have reflected any inflation effects over the time you were working, or even since the time that the scheme was designed. So at the end of the day, you're getting 2% of whatever shillings you're earning at the time you retire, and it doesn't have anything to do with the money you might have been earning earlier on in your career.
As a custodian, we have to be a bank that is licensed by Central Bank of Kenya as a requirement. We're also supposed to be registered by the Retirement Benefits Authority through licensing, and licensed by the Capital Markets Authority to be able to carry out transactions at the Nairobi Securities Exchange as instructed by the fund managers on behalf of the Board of Trustees. The benefits of appointing a custodian on behalf of the fund is: 1, the custodian ensures compliance with the retirement benefits regulations, as well as being an international best practice for this. As a custodian, once we are appointed, it allows other service providers to focus on their core business, as such allowing transparency in carrying out these mandates.
Our primary role as fund managers is to advise the trustees. The Board of Trustees delegate the responsibility to manage the assets of the scheme to third-party asset managers like ourselves. So our advice is our work is to analyze the best investment possible that will give your scheme the best return possible at the lowest level of risk. And the way we go about this is by conducting very diligent research in the investments that we can make. So all our investments are made out of research and actually by making informed decisions.
I have no intention of promising or saying something that I will not keep. So I think it's important to acknowledge that. Are there things we can attempt to do to make sure that we bridge the gap? The answer is yes. Would we be able to align it to 100%? I think the answer is no. I think it's important that I make that very clear. Do we appreciate pensioners and the work they've done for KCB for all the period and building the pillars? The answer is yes. And therefore, emotionally and in the right direction of travel, there will always be these arguments. In any of the pensions trustee, that I've been a trustee, it is the right level of engagement. I think the beauty about KCB is you not only have the sponsor that listens or the trustees that work, is you have a committee that works, and I think you've got an open engagement that we've built over a long period of time. But I think that has to be built on the basis of being open, and therefore we don't come back next year and then pensioners are looking at me and say, Paul, you said you will align to 100% and you didn't. It is not the right thing to do.
What you are getting pensioners is not a salary, you are getting a pension. So, and we don't pay pension on advance. The pension is paid as when default is. So the salary advance that the member is talking about is a loan facility which was structured by the banks to at least assist members to access money in advance to sort out their immediate problems. But that one, we have no control over it. Our control is pension, and pension is paid at the end of the month. It cannot be paid in advance. When
a member retires from the scheme on grounds of ill health, the formula is computed in the same basis as retirement. We apply the formula of 2% times years of service times pensionable salary, and it's reduced to take care of the early retirement aspect.
The other emotive item through the chair is this Upper Hill building. So when the construction was happening, the dream was you're the tallest. Today the truth is you're not. And it's not. It's a fact. And I think it's important. Therefore, the assumptions that were there, although they were right at that point, they cease to be correct, and you have to adjust your numbers. That is the language of business, and that's how we have to act. At the end of the day, somebody else comes in and is putting up a lot more taller buildings, maybe. So you've got to position correctly to make sure that you utilize that space. And the trustees, and I speak as a trustee of the other scheme, and not just as a sponsor also, but as a trustee of the other scheme, is you make informed decisions based on the circumstances at that point. In any point in time, you make the right assumptions. Those assumptions can be challenged over time, but it doesn't mean that you are wrong.
When the project was started, we started as a one scheme. So there were a lot of preliminary costs which were incurred at the beginning. So in the books are still seen as for DB scheme. But upon completion of the project, which is a complete, we shall do the final accounts, carry out reconciliations, and do the proper split. Where the scheme has gotten much more than what it was supposed to do, then the other scheme will have to compensate it. I
think it is about what pleases the majority and what's the right thing to do. We are proud of our brands. We are proud of having those branded items. It is where we are coming from. But it doesn't mean that we are right.
Sentiment around frontier markets has weakened a little bit. Sentiment drives markets in the short term. People are concerned about frontier market equities, not only Kenya. People are concerned about currencies. And therefore you see sellers of equities in certain markets cause equity prices to come down. The same companies, just like your company, is still continuing to do well. So in the longer term, the equity prices, in the short term, they're driven by the sentiment. How do you feel comfortable? Do you feel like there's going to be big gains to be made? But in the longer term, it's really driven by corporate earnings. The companies that make profits usually see their share prices rise and continue to rise over time. It's just year by year, you will see quite a bit of volatility.
I would like to ask you guys to really, really increase your portions. I'm telling you, I don't want to blow some trumpets or something. The people who increase their monthly contributions are not complaining as much as the ones who did not invest. It's a bitter pill, but that's the truth.